Good morning and welcome, Wicked Smart listeners. Thanks for joining this week. This is Chris Bregan, and my focus every week is to help you be empowered, change your behaviors, take some action, and every guest a little bit different. Today we get to hang out with Mr. Jordan Silvester. Now, there's a mix of things you're going to hear us talk about here. He's a realtor. He's also a real estate investor. He's done 800 deals. He's celebrated as Windsor's one of Windsor's top realtors. So you're going to hear how and why he navigates that in his own marketplace. He's got extensive experience in investing now. So both with navigating pitfalls of the industry, navigating pitfalls in the realtor world. And I wanted to bring him on. I wanted to bring Jordan on because that was my world, as most of you guys know. His experience includes large and small projects. He's eager to honestly share his highs and his lows, as you're going to hear. We're going to jump into some of that with you. And like me, you're going to find out that he wears flip-flops until it snows. It's exactly what I do. How could he not have him on the show? Okay, buckle in how I bring you the next Wicked Smart Masters class with Jordan. Okay, Jordan, with that as a little backdrop, let's dive in here. Welcome to the show.
Thanks so much.
Yeah, I as I said to you off air, a couple interesting things. You're into hockey. That's my life. You wear flip-flops to the winter. I'm the only one insane I thought that does that, so that's really cool. And you got the realtor/investor mix. So let's just, for the sake of kind of taking the listeners behind the green curtain, talk about that journey first. And I have some questions I jotted down. Like, when realtor, when did you start doing like a hybrid in your business? And just enlighten us with that.
Yeah, so realtor started in '07 as admin assistant to my father, who's in the business since '88. Then turned around and
family business, similar again.
Yeah, similar. So then ran into in '08 was licensed. So this just literally hit 16 years licensed about a week and a half ago. So there we go, 16 years running this in this business. And so did that for probably like the next 10 years is probably the best way of describing it. So I just did the real estate thing. I helped a ton of people invest, helped a ton of people buy and sell homes, just did more of the real estate job. Then along the way, like I had a house that I ended up keeping. I bought another property. And so I held my personal residence and rented it out for a little bit and then ended up selling it after the fact, after I got into some tenants and doing that. And I didn't really like it. And then of course, you're going through life and you're like, okay, so how do I invest? What do I do next? Or in these things. And so right around 2019, earlier in February, I was at a big conference. We just came back from ours. We had a massive conference. And Gary Keller said this simple thing. Every great deal has passed through your hands. It doesn't mean like every client that you've helped create wealth, we as realtors have done that. And all that did was stick me is why haven't, like most of us haven't bought, like we own our own homes for the most part, but we don't own our own investments. And he went, why not? And so then I really had to ask myself a tough question. So I'm sitting on a really cool deal that I was at, and I literally call up my other two buddies who've got investors, my investors, and call everyone and say, hey, I've got this amazing deal. Do you guys want to buy it? It was $100,000. And what's crazy about it is then that question popped into my brain. Every great deal is going through your hands. And I'm like, why don't I just buy it? So instead, I called one of my investors back and said, hey, would you want to do this with me? I need, like, if you fund it, I'll put the pieces of this deal together, blah, blah, blah. So that's what we did. We became partners on that deal and we picked it up. And we actually just ended up selling it recently due to the market and things up here. But we bought it for basically 96. We were able to burr it. We made cash flow for the last couple of years. Then we just sold it for 250. So that's been one of the better investments I've made. But I did a bunch of wholesale transactions. I did a bunch of like the buy, renovate, refinance. You just do those. So I did, I think, about 10 transactions over the next 4 years. And then in 2022, jumped in and might have done 7 in 7 weeks where I bought 7. And then the market kind of made a shift. And so I had to make some adjustments to that. So when you looked at that variance, I was heading more into the investment world. I'm part of a real estate team, which helps support my clients. If there was a time where I was busy over here and couldn't bring the same level of intentionality to my clients, I always made sure I had a team and people supporting behind me to make sure that everybody on that side of the house was taken care of. And I had a team, of course, operating on the investment side. I had my contractors, I had my other business partners, people doing things and making sure everything got done. So it was really quite the experience. So that's kind of the Cliff Notes, run it down version of what I've been up to.
No, I love it. And Gary Keller is always cutting edge. In the investment world, it sounds like, you tell me if I'm tracking right, you buy by raising some money and conventionally. Am I tracking with you? Or what are the different ways you've bought so far?
So almost all of it is using other people's money. So like private funds. So we private in, and then depending on the hold, I would find somebody who could hold the mortgage on the way out. And because it would be perfect burr, there was a couple, once we got smarter about it, we'd close the property in their name at the time with the private funds, renovate, and then refinance it into their name in the future. So that was one of the strategies we used later. Of course, the first time I was on title, and so I had to get myself off of title to make that make sense for the client. So we had some fees show up. So again, you test pilot models, and then you kind of see where the glitches are, and you just, oh, okay, well, we spent $1,500 to get me off title, so we could refinance at better interest rates. And so we did all of those steps as we walked it through, and kind of just learned as I went, right? Like remodeled a few times. So my first partner, we did this, and then I was talking with my coach, and my coach says, hey, like, how are you paying yourself? Like, how are you going to get yourself out of the business one day if you want to operate? Like, where are the breakdowns of value in what you're doing? So if you're going to hire people to roles, right? Because if you just do everything and you have no idea where the money's coming from, yeah, you're making money, but if you don't understand how can you ever hire somebody? Because if you're going to scale, you can't continue to do everything. In the real estate business, I understood that very simply, right? Like that's why I have admin, you have people supporting you. On the investment side, I just went, well, yeah, but I bought it with my business partner. We have an agreement on equity, positions. We execute equity positions and everything comes back out. He says, yeah, that's great. But what happens when you don't want to be in that role? And I said, I don't know. So he says, okay, start building it out so you can build out the different structures. And so then I did and was able to remodel it and do some things. So it's a really cool process and experience.
Well, it sounds like you're super flexible. It sounds like we also, Jordan, have a lot to talk about, you and I, in general, as we break into Canada. So this will be interesting. So let me ask you this for the listeners, because it's largely, there are some realtors, there's a whole bunch of corporate people with a W-2 that would like to transition to the investment world like we teach. We've been helping people do. And of course, there's investors that wholesale, flip, and then in our world, the creative financing. So I'll ask you kind of a dual question. If you were talking to the realtors and the investors as a group, you're on stage, and you had sort of a chance to go back and do things differently, would you tweak anything that they could glean from that?
So it's always interesting to rewind. I think when you're looking at it, I think asking better questions earlier. So again, a business plan is probably a good place to start, looking at all the numbers, all the structures of what you're doing. And like I said, the coaching part was, okay, so if I could go back, it's, okay, where are the values? Like, what is the job? And so you have your general contractor, somebody managing the thing. You have who finds the investment, like who's the person who's actually like securing or finding your investment. That could be the realtor, that could be off market. You're looking at who's the lender, who do you have in your lending, and then you build out this model. And again, there's a few models that exist. One is an equity lender and one is an interest lender, right? So you either pay an interest rate back to the lender on time, or you can have them be an equity partner, and whether or not that works in your model. So again, building out models and then finding partners who want to work with you in your model that makes sense to you and that you're able to create the right skilled people. That's the other thing I would say is, again, the benefit of being a realtor for the years I had a lot of contractors in my back pocket. Like, it wasn't like I had to go find new contractors. I could just use the ones that, of course, have been working for my clients, have been working with my other investors. So it's easy to kind of find my crew, per se. And I would say that might be one of the most important things, especially in the BRRRR model, to make sure you have a solid crew that works in a timely manner, that keeps costs within perspective. Again, I always tell people, simplest rule of thumb is, if you think it's 50, add another 10. If you think it's 60, add another 12, right? Just add a 20% variance every single time, because one of the things, as soon as you start working, and it's not because your contractors are doing anything wrong, price of materials changes, a foundation issue, these things, and usually 20%. Yeah, it's just the business. And that's the thing. So again, all these little pieces, I think the biggest thing would be is listen to the people who are already doing it, find a model that's working for someone else, and then add your creativity. That's also a very big Gary Keller thing. One of my things, I like to be highly creative and do it my own way, cut my own path. But if somebody's already done most of the heavy lifting, why not just follow that model and then make it personal, right? So if you're not 100% happy with what that person's doing, that's cool. You can change it, but don't start from square one and try to rebuild something new. There's already a bunch of people out there who have done it before you, who have already tread the path. And it doesn't mean, like, get your feet wet using a model that works because you see it consistently working in if you're a realtor, you might have clients doing it. If you have friends that are already investing, that's probably why you're interested. You have some friends doing it, go figure out their models and what they're doing, and then just mimic those things if they're being profitable with them, right? Make sure you understand why they do what they do, not just the numbers of it, but why they have those numbers. And then that allows you to kind of think it through as you process and make any adjustments you need as you go. And like I said, when I started day one, I had one group of rules that I played with my investors, and I told them up front, like, we'll play with this as it goes to try to figure out what makes sense for everyone, so everyone feels fairly dealt with in a transaction. And as we moved along, and we got a more and more succinct and clear model by the time I was done. But there was, of course, already a bunch of investors, in my own network and other places. I probably could have just said, hey, can you give me a quick one page on like how you look at your investment, or how you break down like your lenders, your people, and how you kind of do what you do. And then most of them want to give you the rules to the game. They don't mind. They're like, oh yeah, here's my cheat sheet, right? So
you said coaching, or you alluded to coaching several times, and not obviously it's what we do, so I'm a big proponent of it. But just to, again, the similarity with you is in 90, gosh, what was this? 94-ish. I said, okay, I want to move from builder to realtor hat, and by doing that, I said, who's selling 100 homes a year? That's what I want to do, and go hook up with them. So sounds like you have the same philosophy. Go find a coach, mentor, etc. That someone who's already been there. So do you do that in all areas of your life, or just those two right now?
No, so professionals everywhere. So one of the big things I did a few years ago is I keep adding more and more professionals into my life. Really good accountants, lawyers, like all the people you're going to need. And what you want to do, and this is the thing, and you want to review all the time. So it's not to like every week or anything, but every year or two, you want to probably put your lawyer in review. And it's not because he's not doing the job. Is there just somebody else that's doing what you need differently, or those things, and over their title companies, right? Like whenever you're looking at your supports, it's not bad to hold them accountable to their integrity, right? And saying, are they still supporting my business in the best way? My accountant, who I've got right now, has always said to me, hey, if you reach this echelon, this will push outside of my world, but I have good recommendations to support you there. And the cool part about that is he knows that there's a chance one day he's not going to earn money from me, and he's not sitting there saying, well, then I'm not going to help you today. He's realizing that in this moment, we're partners and we're going to benefit each other. But there is a moment where, in certain scales, that's just not what he does with his business. And that he wouldn't want to, no different than as the realtor. Like I do a lot of things, but when certain people ask questions, like I know the realtors that are better at it. So whether I lean on them for advice, or whether I just say, hey, you know what, for all of what you're going to go through, I'd really, if I were doing this thing as a realtor myself, I would still hire this guy, because that makes more sense because they've got the experience. So coaches, advisors, all of these people that are in your world, and again, review just means you're verifying that they're still adding the value that you expect into your world, and you should be hopefully adding value into theirs, right? Like it's a partnership. Most of these things, I find the best part about what I'm able to do is I create massive relationships that when you do need things and things aren't exactly 100%, hunky-dory, these people come and stand beside you and support you instead of just being transactional with you, right? Like, as a realtor, I find it very easy to be emotional with my clients, to be involved with them, whether that's on the investment side or on that. I really want, and I'm working my best towards their positive outcome and pushing them to where I think they need to be, whether they can see it themselves or not against their will by any means. But when people need that motivation, that's what you want in a good accountant. You want the accountant who's going to push back and say, hey, this won't be good for taxes, or this won't be good in this scenario. You want a good lawyer who's saying, hey, did you consider the following XYZ? A realtor, this area, man, yeah, there's really good benefit. Hey, watch out.
Any coach, right? What's going on? Anyone
all of these arenas. Well, anyone should do that. But these are why when I say verify, clarify what the relationship is and make sure that that's where it still stands, is that it's a give and take, and that the person is the best at the moment for your current circumstance. And it's not because, it's not about I'm loyal, highly loyal. But I've learned that in some respects, it's also reminding myself that I might be putting undue stress on this other person if I just went and got somebody different and let them do more of what they're really good at and trying to deal in my world. Sometimes it's better. And like my accountant's the only one who's ever said it outright, saying there is a moment where you may push beyond what I like to do. And I'm okay that at that point, we'll hand you off to somebody else who is capable. And I think that's a really cool thing to hear from somebody, to be like, yeah, I know my limitations. I know my abilities and my my strengths and my weaknesses. That's an awesome thing. The humility there was huge.
Yeah. Just like team members, right? I have the I won't call it a plus, but I have this uncanny ability to bring people in and then stretch them too much, and then we outgrow them. Right. So the same team that got us from say 1 to 3 million is an entirely different team that's going to be 4 to 10. So same exact thing that you were highlighting with your accountant. Let's twist it up a little bit, Jordan. What were some headaches or speed bumps that you've hit that, again, the Wicked Smart listener could glean from? Because that's what I'm trying to do. Hey, yeah, here's what I went through. Avoid that, like some of the lessons you've shared so far. Maybe pick one that was like a major headache and then what you learned from it.
So the biggest headache I thought was going to be finding money for great deals. What I've learned very simply is money is the easiest thing to find if you actually have a great deal. There's a lot of investment funds that exist. And so when you're first stepping out, you're like, where am I going to get the money? Where am I going to get the money? I promise if you actually go find a really good investment with really good bones and really good opportunity, the money will show up to it. And that's what my coach is like, why not just go get all the opportunity? If it's so good, you'll find the money. And that was that shift in the mindset between, oh, where am I going to find it? Where am I going to find it to? Money is like, it literally does grow on trees if you have the right investment, if you have the right opportunity. For people who have wealth, they'll invest beside you. And again, they get their portion of it, but they're there. It's not hard to find. And I think I will admit this, I'm still trying to figure out the hold side where you need to actually go to a primary bank and get primary financing. That's been more of a longer term like glitch. Like I said, you usually got to find somebody who has enough borrowing power to do some of those pieces. In our country, it's a little bit different. I think we have stricter rules around some of how we can lend up here. But that's not to say that the deals themselves aren't findable, transactable, and the money for them is actually the easier part. And at first I thought that was going to be where am I going to find the money? Where am I going to find the money? And then you're like, hey, it's literally everywhere.
Yeah. And I can't wait to dive in with you. We have a lot of time on the show, but we'll dive into sort of the creative real estate side so you can start tacking that onto your stuff. And hopefully you can come and hang out with us at our next few events. Awesome. Most guests and or hosts, we give a VIP ticket and you'll join us for no fee. Looking back, I'm going to kind of piggyback to the question I already asked you, and then we'll start to move towards the exit here. Looking back, is there any regrets, so to speak? I use that word that you have that you'd like to have done differently.
Yeah. So again, when the shift happened, I had leveraged beyond my means, and I didn't know I had done it because one of the things, this will sound insane, all of the wealth I'd created was generally equity, right? Real estate investor, most of the wealth is sitting in the property equity or in that 20 to 30%. And then all of what I'm, let's say, investing with is in that same margin, right? But what I didn't consider was the pot over here would be affected similarly to the pot over here. So that when the interest rates go up, the market falls. And when that happened, all of my wealth over here fell at the same time my investment that I was sort of like leaning on. If, let's say an investment deal does go bad, you're like, okay, do I have funds to make sure that it's not going to negatively impact my family, negatively impact the investors, like keeping my reputation being solid. I'm like looking over here going, yeah, I have enough wealth over here that if something kind of goes a little wrong over here, I should be able to, go and draw from here to pay here. And the issue was well, this bank emptied and this investment bank also emptied, and they emptied almost at the same rate and at the same pace. So all of a sudden I was leveraging on one hand thinking I was protected in the other, and yet both disappeared. So again, from a very, like, I look at myself as a very intelligent person. What I didn't do is coalesce the two worlds. I looked at my wealth independent from my risk. And that's all I would say to an investor. Make sure you're talking to smarter people and ask really important questions. If you don't want to ask the question, then you shouldn't do it. If you're not willing to go to your buddy and say, hey, I'm doing this and this is how I'm thinking and this is what I'm using as my leverage and this is what I'm using to invest, and I believe the risk is fair, have somebody else ask you better questions. Because I think if somebody had said, hey, but if this goes bad, doesn't that go bad? I might have reassessed that or talked about it, but I didn't really want to because I like, you know what I mean? We get into our modes. It was hubris. I didn't think I could fail. I'd built a really cool model. It'd been working great, making money, for the last 5 years or 3 or 4 years without any real problem. And then all of a sudden you're amplifying, you're growing, and then problem. And you're like, oh, okay. And then your response, right? Well, the issue again was now you're in this shame position. So you if you're ever in trouble, just drop the shame immediately. Everyone makes mistakes. Failure is real. But the only way failure wins is if you don't learn from it, which then creates the success. So again, from that reference, ask really good questions, have a great group of people around me. The only reason why I got in as much trouble as I did was because even though I had really amazing people, I avoided certain questions because I didn't really want anyone telling me I couldn't do what I wanted.
Yeah, you don't hear it.
But I also admit, because I didn't ask those questions, I didn't have full clarity on the risks I were personally taking. If I knew what I know now, I would never have risked as much. I'm not saying I wouldn't have invested. Absolutely, I would have. I just wouldn't have done it the exact same way because I would have been able to see more clearly what I was actually doing, if that makes sense.
Well, yeah, it makes a ton of sense. And your shame comment was super humble and spot on. And I think, real estate, creative real estate has been around since 1600s before banks. And yet people are afraid to do what you just said. Just don't try to recreate the wheel. It's out there. Jordan, how can these guys reach you? And I think we also have a Making Real Estate Easier resource at smartrealestatecoach.com/Jordan. What is in that free? It's just free tools, but just give them a sense for what's in there. We'll put the link in the show notes.
So we've got different resources on the site that help people get involved. Of course, I will function in my local market. So if you want some tools, we have some. Again, it's my calculator. I'm working on getting it. I'll call it this way. I see it and understand it, but I'm working with somebody right now to make it call it user friendly for the average person. And average isn't in the sense that it's just anyone can understand it. It's a simpler tool. Right now, I see it. I'm like, I understand everything. She's like, I don't understand any of it. So I'm working with somebody very specific. So that tool is in process of being changed because I did give it out a few times and found out I spent almost more time training them on how to use the tool. I'm like, there's got to be an easier way.
Yeah.
So I apologize, but that's where that's at right now. If you want to reach out, though, it is jordansilvester.com. That's where you'll find a lot of our resources. So that's where that's at this time.
Okay, jordansilvester.com. Anything with social media or any of the links you want to drop on these guys, feel free to.
So anything. We're on Facebook, we're on Instagram, YouTube, and TikTok. So if you want to come hang out with me along those, followers are great. Generally, just so you understand, we're talking different things. A lot of it's home sale related. There is investment conversations going on, and I love to have investment conversations. So if you want to reach out to me and ask direct questions about investing, different markets, different situations, I like looking at models and understanding why you do what you do. Like I said earlier, the way I learn is through the mastermind mentality. Hey, how do you do it? How do I do it? And how can we support each other? Either not changing necessarily our models, but learning from each other's and tweaking a little bit along the way of what do you do that makes you more successful and saves you money and gives you that upper edge? What do I do? And how do we add that in? Because some of it is personality and some of it is functional. So again, finding the balance between the two.
I love it. So if you're in the realtor space right now and you're trying to position that in addition to anything that I've gone over the years and all these episodes, reach out to Jordan. You can also get a free call with me. I've been doing this lately. Just go to smartrealestatecoach.com, /Chris pre-call, and you'll get a free call. We'll chat about whatever the heck you want, and we'll chat about some stuff that Jordan and I just went over to as far as the transitions. Jordan, super cool to have you, buddy. Again, we're going to chat offline and see if we can connect and do some more things together and get you into some of our events and do some cool networking together. Appreciate you taking the time today.
Hey, Chris, thank you so much for having me. It's been awesome, man.
Thanks, buddy.
Thanks for listening to the Smart Real Estate Coach podcast. If you're ready to invest in yourself and take your investing to the next level, check out our 90-day Jumpstart program by going to smartrealestatecoach.com/jump. That's smartrealestatecoach.com/jump, because now is the time to act boldly in this unprecedented market shift.